Today's highest conviction chart, SBUX Corporation. The verdict is long. Don't skip ahead. The setup only makes sense once you see what's underneath it. We'll build this in 3 steps: what the chart shows, what smart money is doing, and finally the trade itself. Stay to the end for the levels. Here's the daily chart, 60 bars of context. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $118, red is our SL at $102. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double bottom, head and shoulders, INVVM head and shoulders. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points, as those are the swings that confirm the pattern is real. New here, this breakdown happens every day. Subscribe. Then let's get into the structure. Pattern number 1, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs, 93 bonds to 43, measured move target 105 bonds away ones. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is par 1.4%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the head and shoulders. It's a bearish formation with 3 out of 3 strength. Head 108.25, shoulders 102.26, neckline 97.99. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 15.3%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3, this is the INV head and shoulders. It's a bullish formation with 3 out of 3 strength. Head 93.64, shoulders $100.52, neckline $105.97. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 114.2%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Candle signal number 1, a doji just formed on the very last candle. See the dashed box on the chart? That's where it printed. It's a neutral read with 1 out of 3 strength. Open close, indecision, potential reversal signal. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Candle signal number 2. A bullish harami just formed on the last 2 candles. See the dashed box on the chart? That's where it printed. It's a bullish read with 1 out of 3 strength. Small bullish body inside prior bearish, selling momentum weakening. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Here's the level map, and where our entry, target, and stop sit inside it. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SS inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of plus 0.26, technical plus 0.20. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADHO is at 14, and that tells us we're in a weak trend regime. Important because some strategies only work when ADXN is above 25. On balance, volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Quick gear change. The chart told us what retail sees. Now let's find out what smart money is actually doing. Order blocks, fair value gaps. The institutional read. On the daily chart, the SBUX is bearish with a downtrend market structure. The most recent order block is a bullish zone between $94.47 and $95.77. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $95.77 and $96.90. Price tends to revisit these imbalances. Most importantly, we just had a Chach bearish move at 103.69, a key structural signal that smart money traders watch closely. Now the volume profile, where positions were actually built, which is where price reacts. The point of control, the most traded price, is at $83.83. The value area runs from $80.85 on the low side to $96.73 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price 103.61 is above value area high, 96.73. Trading above VAH indicates bullish strength. POC at 83.83 is key magnet support. Now, order flow. We estimate buying and selling pressure from each candle's close and volume. Over the recent window, buying pressure accounts for 53% of volume versus 47% selling. The overall flow signal is neutral. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 60, signal neutral. Williams %R is at 30, neutral. Chaikin, money flow reads pole 0.09, bullish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Fundamentally, this one's pretty in line with its sector. No screaming value or screaming overvaluation. That's actually fine. We're trading the chart here, not the company. Quick zoom out, the bigger market picture. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Heads up, entry, target, and stop are 60 seconds away. Subscribe so you never have to hunt for the next one. This slide is why accounts survive. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong and one bad trade can take you out. Everything's stacked, now the levels. Bias is long. We'd look to enter near $103. Take profit sits at $118. Stop loss at $102. That puts us at 27.225 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 27.25. Horizon is roughly 5B. That's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan, never risk what you can't afford to lose. Tomorrow morning, the scan runs again. Subscribe and turn on the bell so you see it first. So zoom out for a second. What we just walked through on SBUX, that's a long bias setup projecting roughly 15.0% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, They all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Comment your watch list ticker, and it might be tomorrow's video. Trade safe. See you in the morning. Tomorrow morning, the AI scans the entire market again, and I drop a fresh breakdown on whichever ticker ranks highest. Could be a stock, could be crypto. Join the channel and turn on the bell. That way tomorrow's video actually reaches you. See you in the morning.